A subsequent date requires me to issue a credit note or a debit note for that same transaction which is pertaining to that previous period.
I'll try to make it in 3 parts. First part is accordingly the GST rate should be applied independently because this credit note per se is not an independent event. Whether the government will accept, answer is logically no. Which is the scenario where this transaction will be covered and accordingly decide on the rate of tax.
Hello and welcome to GST Dialogues. So there's a notified date of 22nd September that the government has given. But supply takes place throughout the year and 22nd September is for GST. So there could be a scenario where invoices have been raised prior to 22nd of September, but a subsequent date requires me to issue a credit note or a debit note to that same transaction which is pertaining to that previous period. How should the industry be tackling this point?
Maybe we'll have to break this discussion in various parts. I'll try to make it in 3 parts. First part is with regard to your credit note per se I will take. So now credit note, if it is for a transaction which has already been effected prior to this rate change, say it has happened somewhere in August, and subsequent to an agreement you agree to give a discount, or there is a deficiency in the supply, you give a credit note. So if it is very specific to a particular transaction, then your credit note will have the same rate of tax which was the tax charged in the supply done originally, means the tax invoice raised in the month of August, because it's basically reversing or adjusting a portion of the price or the entire transaction by virtue of a credit note. So I think to that extent this credit note on a specific transaction is clear. The second type of transaction is you have a credit note which is being issued for a period where there are number of transactions which are covered. Say typically if you see lot of the companies may give a discount which is on a calendar year basis or on a quarterly basis also or a half yearly basis. It depends on industry to industry. So if you take a half yearly kind of a cycle which is say April to 30th of September, obviously the sale which has happened till 21st to their dealers will be at a higher rate, and the 22nd to 31st, which is an interim period of 8 days, 7 or 8 days, will be at a lower rate. Come October, November, once this discount is eligible for the dealers, the manufacturer, when they give a credit note, is it right for them to give a credit note entirely on a lower rate for a supply which has happened across the period of 6 months? So here what I believe is that though the discount is computed on a base value of your entire purchase of the 6 month cycle, the OEM should split the credit note into 2 parts. One is for the procurements done till 21st of September, the second will be 22nd to 30th of September. Accordingly, the GST rate should be applied independently because this credit note per se is not an independent event. That is why if you see, the credit note has a time limit for being issued linked to the original invoice date. So credit note per se is not an independent event. It is tagged to the invoice. Accordingly, my rate of GST in the credit note also should be tagged to my supply. Just imagine another scenario if the rates have increased. Some of the products like aerated water, the rate of GST has increased on the higher side. Can you issue a credit note for supplies done for April to September 21st at an 18% rate, give a GST credit note 28%? Whether the government will accept. The last part, the third part is your debit note question. So here interestingly what has happened is the law has looked at this debit note in 2 perspectives. One is a case where your supply was done for say 100 rupees, but you by mistake have billed only 90 rupees to the customer. So you had done a short billing to the extent of 10 rupees. So this is a case where the billing itself was done at a lower price, which you identified subsequently and done. I have given a debit note to the extent of 10 rupees. That being the case, this debit note is not an independent event. It is actually tied to your original supply itself. Even interest may be applicable in such cases if there is no credit balance. So to that extent, the rate of your GST on debit note on such shortfall in the billing will be at the old rate only. But if you have a case where a debit note is issued on account of a price escalation, so this price escalation, in my understanding, in my view, is to be treated as an independent event. If not, then the question of interest will again come on price escalation. Fortunately, the time of supply provision have given a safeguard your value of supply will be considered to be complete to the extent of billing. And if my billing on that date was for the correct value of 100, subsequent price revision which have to be assessed and computed, that cannot be a link to my original invoice, and the debit note which I issue will have to be at the rate which is applicable on the date of the debit note issuance for such price revisions. So in summary, I think industry will have to look at which is the scenario where this transaction will be covered and accordingly decide on the rate of tax.